Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 7th, 2025, and we're diving into Kenvue's latest earnings report for the second quarter of 2025. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Kenvue, known for its iconic consumer health brands like Aveeno and Tylenol, has just released its Q2 2025 results. There's a lot to unpack, from their strategic initiatives to financial performance.
Revenue and profitability overview. Let's start with the top line. Kenvue reported net sales of $3.839 billion, a 4% decrease compared to last year. However, they managed to achieve an adjusted EPS of 29 cents, slightly above the forecast of 28 cents from 5 analysts. John, what does this tell us about their performance?
Despite the decline in net sales, Kenvue's ability to exceed EPS expectations indicates effective cost management and operational efficiencies. The adjusted EPS of 29 cents, although down from 32 last year, still shows resilience in a challenging market environment.
Operational efficiencies and future outlook. John, Kenvue's gross profit margin slightly contracted to 58.9%, and their operating income margin improved significantly to 18.0% from 3.9% last year. How do these figures reflect their operational strategy?
The improvement in operating income margin is notable, especially given the previous year's non-cash charges. This suggests that Kenvue's global supply chain optimization and cost-saving initiatives are bearing fruit. However, the slight contraction in gross profit margin highlights ongoing challenges like inflationary pressures and strategic price investments.
And what about their outlook for the rest of 2025?
Kenvue has revised its full-year outlook, expecting net sales and organic sales to decline in the low single digits. This adjustment reflects the current market conditions and their strategic focus on long-term growth.
Strategic initiatives and leadership changes. There have been significant leadership changes at Kenvue, with Kirk Perry stepping in as interim CEO. How might this impact their strategic direction?
Kirk Perry's appointment comes at a crucial time as Kenvue is undergoing a comprehensive strategic review. His leadership is expected to focus on optimizing the brand portfolio and enhancing operational performance. Additionally, the new CFO, Amit and Group President for Asia Pacific, Andy Dasgupta, bring fresh perspectives to drive growth.
What can we expect from the ongoing strategic review?
The review aims to unlock shareholder value by considering various alternatives, including potential divestitures and operational improvements. It's a strategic move to position Kenvue for sustainable growth.
Key takeaways. In summary, Kenvue's Q2 2025 results show a company navigating through challenges with strategic leadership changes and a focus on operational efficiencies. While sales have declined, their ability to exceed EPS expectations is a positive sign. John, any final thoughts on Kenvue's investment prospects?
Kenvue's strategic initiatives and leadership changes are promising for long-term growth. However, investors should keep an eye on the outcomes of the strategic review and market conditions. Overall, Kenvue remains a strong player in the consumer health sector.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Kenvue's performance in the comments below.